and welcome to the first quarter. It's in the books. 2026, the first quarter's over. This is our April market update as we just got past tax season. Greg Duke, Senior Vice President. What's going on in the markets? Let's talk a little bit about it.
A lot of great things, Chris. It's been a bumpy ride to this point.
Hasn't it?
It's been crazy to watch what's happened. But with the Iran conflict hopefully coming to an end soon, markets are seeing these recoveries and seeing levels come back to the more anticipated levels that we thought it would be at the beginning of the year.
We were saying to folks at the beginning of the year, when we got back together in January, we said a couple of things. We said we think we're going to see a new Fed chair come in, interest rates will come down. We think we'll see a spreading out of the market. We thought there'd be kind of a movement away, a smidge away from tech a little bit. Now that's kind of gone in different directions, but let's talk about interest rates first. That guy is coming in May 12th, I think, right?
Correct.
And we're expecting to see, how many interest rate cuts do you think we'll see this year?
That's been the big question. Is we anticipated at least two.
Yes.
Up to this point, you can't have an interest rate cut with $4 gas. That's going to be a problem that he's going to face as soon as he comes into office. So that's going to be a big thing for this administration to want to end this conflict quickly.
So this conflict is driving so many different things geopolitically, also in our country, because we can't cut interest rates until the gas prices come down for sure.
Correct.
And that's not going to happen until we resolve this thing in Iran.
Correct. That's exactly right.
So as we look at it, though, not terrible. I know the markets have been all over the board and people have been nervous, but the reality is, as we look at the markets at the end of the first, really kind of coming towards the end of April, most of the indexes are up, not up big, but they're up. Let's talk a little bit about that.
Sure. S&P up 4.1% year to date. It's basically come back gangbusters in these last 3 weeks. It's up around 9.2% so far this quarter. So when we look at that, we couple that with 3% on the Dow, we couple that with 5% on the NASDAQ. Basically, levels are right where we expected them to be.
So in spite of all this, we're kind of where we
Correct.
thought we'd be. So if we see the conflict resolve itself in the Middle East, if we see gas prices come down, we see interest rate cuts, we think that private equity is going to get a little bit better. We think the real estate market's going to get a little better, and the broad market is going to get a little bit better.
100%. Also watching emerging markets as well. The overseas
has been doing
investments
great.
have been doing great, and that's largely due to a weakening dollar, which if that continues, that's going to continue to drive those forecasts forward.
So what that's telling us is for our clients in MFA Wealth, the diversified portfolio still makes sense. The broadening out portfolio still makes sense. Having some tech holdings still has good value, though, doesn't it?
Very much so.
The chips, as a matter of fact.
Correct.
We were talking about the fact that Huang, the guy that is the founder of NVIDIA, was saying very clearly that the choke hold, the bottleneck, if you will, is going to be in storage and in energy.
Correct.
So those are the kind of places we've been looking at in technology quite a bit. And the chips you saw today, the chips went bonkers, didn't they?
The AMD's going crazy. To your point, that's one of the reasons that commodities and materials are starting to be one of the most invaluable asset classes that we have inside of the portfolio.
Rare earth minerals too, that's all starting to, so we're keeping an eye on all this stuff, aren't we?
Yeah, the commodities have done very, very well through the first quarter, and we anticipate that, as you said, the broadening out of the market so accurately is touching all these different aspects of asset allocation.
So if I hear you correctly, a diversified portfolio consistent with your level of risk.
Correct.
Having some technology, but not being completely dependent on technology in any way, and being prepared for a broadening out of the market. I know we were talking a little bit about halo stocks last time we talked. It sounded like 3 years ago people would kind of laugh you out of the room if you said, I want high asset, low obsolescence stocks. Those are the old mainstream stocks, right?
Coca-Cola.
Isn't that funny, right?
Exactly.
Brick and mortar isn't so bad anymore, is it?
No, it isn't.
And how about all these SaaS stocks we've heard so much about for the last 3 or 4 years? The darlings of Wall Street, software as a service. There's no more infrastructure needed. We've seen AI really, it shows you. We always have to be nimble because AI has really kind of put them on their heels a little bit, hasn't it?
Very much so. And we think that's going to, they'll figure out their path forward.
Yes.
And there's going to be a lot of M&A in that space. Where basically they're going to get super SaaS, basically super companies gathering other assets.
Consolidation in the industry.
Correct.
For sure.
Correct.
So if for clients, I think as we sit here on the end of April, April 23rd, whatever the day is today, we're saying to our clients the first quarter wasn't nearly as bad as we could have been based on everything that's going on. The doom and gloom was greatly overrated. We are looking for interest rate cuts. We're looking for the market to broaden out, and we're looking for a diversified portfolio to win the day for our clients this year.
100% correct on everything.
So if anybody needs any more information, please don't hesitate to call us here at MFA Wealth. Log on at www.mfawealth.com. mfawealth.com. Thanks for joining us for the market update.